Attention hard asset investors. If you want to maximize your gold and silver holdings, consider owning businesses that own a massive amount of the metal, who will benefit the most as the world witnesses the mother of all gold rallies. With nearly 10 million ounces of gold resources through acquisition, this 50-cent stock has received a $2.65 price target from Cantor Fitzgerald. Learn more at crossthestreet.com/gold2016.
Hello, everyone, and welcome into the show here. We got Bo Polny of Gold 2020 Forecast. He's a very popular guest. He's made some serious waves in the investment community, and he's had a lot of successful calls, and he's provided us with a great deal of insight. Now, we're going to talk to him today about what he sees going forward. He has some important times in his timeline regarding the stock market, regarding precious metals. But at the same time, we do want to talk a little bit about what we've discussed in the past regarding some of the calls that might not have gone as planned, or maybe the way we would have perceived them to be planned, and specifically the stock market, which has not crashed, but March has been a relatively good month for stocks, and gold has come up as well. So we got a lot to talk about today. But first, I want to say hello, Bo Polny. Thanks for joining me today.
Ken, great being here. Thank you again for calling. And yes, I look forward to speaking with you today. I think very exciting times for our future here. So thank you.
Bo, let's start off with what we had discussed about in our interview about a month ago, just under a month ago. We did this interview. Actually, we recorded it a month ago, but released it a few days later. So we talked about stocks and gold. Now, we talked about them going in an inverse direction. Now, this month, we saw gold go up along with silver pretty substantially. And you did say that we would see that. But we were also under the impression that stocks would be going in the opposite direction. And, with the events of Janet Yellen's decision not to tighten interest rates, we saw gold take off. We saw also stocks go up. We're up to 2016 highs with the stock market. So I want to get your thoughts on this and give you an opportunity to just respond to the events that we've seen over the last month.
So Ken, great question. My question back to you is, give me one market that's made a higher high. And none. Okay, so what kind of a trend are we in, Ken?
Well, we would be in a... Well, I'll let you answer that.
It's a bear trend, okay? So the point is lower highs and lower lows are a bear trend, period, okay? So we were looking for a turn on the stock market at the very early part. Last interview we did was on the 24th of February. And you're correct. We were expecting gold to go up. Actually, from that time point, gold was trading, I think, at $12.30, and it went up to, I believe it was high. Actually, we can go to our slide here. Let me pull that up. Yeah, so the 24th, we did our interview. Gold was trading at $12.30. It rose following, and it broke out of what we call a pennant formation. It went up to $12.87. So basically, we had a $57 rise. So it did go in the direction we wanted. Again, wasn't with the power we were looking. Secondly, with the stock market, as we just talked about, there is not one market from any indices, the Dow, S&P, NASDAQ, neither of them have made any form of higher highs. They're all lower highs. And all that's happening is everything is topping. And the last interview we did, we never put a time frame on the interview we did with you. I just said soon, very soon. So we're 3 weeks into the interview here, and I don't see any more energy that the energy markets could have to the upside, and everything's going to turn and blow up really, really soon here.
Okay, yeah, no, definitely, and that's I'm glad you were able to clarify those things and answer them, because I think the average person looking at these markets are starting to feel like, hey, the markets are coming back. They don't seem as volatile as they were in January when we were seeing the markets really go crazy. Obviously, the Fed not deciding to kick this can down the road and gold going up, the market's going up, we didn't see that inverse pattern. So when do you anticipate this happening, Bo? And let's start going down. You sent me a lot of slides here, and it's all about what we are going to see going forward. So let's start to go through them.
Well, let's start at slide, I think it's number 4, which I sent you, but it's called, basically March 9th, 2016 on CNBC. So there we got Fisher, a former Fed chair, talking, and his words specifically were, the Fed front-loaded an enormous market rally in order to create a wealth effect. Okay? So you see that slide. Next, let's go to the next slide, and I've got all the markets here. Not all of them, but I got 1, 2, 3, 6. I got the S&P 500. I've got Japan, Germany, Hong Kong, Australia, and Toronto. Okay? What do you see drawn out in all those charts there, Ken?
The wedge.
That's
wedge
right. Exactly. Okay? So has the wedge broken down yet?
No, not yet.
Right. Yeah, you can see it forming. You can see it's broken. Australia possibly, Toronto maybe, Germany possibly, but basically it's just all stuck in the very, very tip, very end. Now that wedge formation. You know when we saw that last? How about November? How about in July of 2015? Okay, what happened afterwards? The complete meltdown. Right. And in August.
That was the highs of the stock markets across the world.
That's right, but what you have to happening is so we're looking head and shoulder formation. So that was a head, you had to drop, have a right shoulder forming on the monthlies, and then from this, once you break a right shoulder, all hell breaks loose.
Wow. Okay, well, it's very clear on the way you have these charts written. Let's talk about precious metals then. You talked about them having a direct inverse relationship, and we've seen gold and silver do actually relatively well here in 2016. And if we do have all hell breaking loose in stocks, I guess we can be expecting all hell to break loose towards the upside for precious metals, is what you're saying.
It's exactly what I'm saying. So if we take a minute, we can go to the first slide I sent you. That was the one that we actually sent you on the 24th of February. And you'll see this big blue arrow pointing. What we saw there, what we're looking at is it's a rise from the July lows, from the December lows, and went into the January, then a January breakout into that high, which occurred in February, and there's a big blue arrow pointing to it. There's a pennant right there, okay? And so when we did our interview, what I was looking at is that pennant was going to break to the upside. I knew because we had an upcycle, so that pennant was for sure going to break to the upside, and we were correct. So gold broke out. So if you go to slide number 2, you'll see that the pennant broke to the upside. Gold rose from $1,230 down up to $1,287, which had roughly a $57 price rise, and we topped out. On that, which was, I think, the beginning of March, we actually exited all our positions. We went short on gold just for 3 days, right into the FOMC meeting, and all subscribers were instructed to look for that price target right around the Fed time point, which occurred. And again, remember we talked and you've asked questions, what if the Fed does this? What if the Fed does that? Remember we used to have asked those questions, or your words were, does it all baked into the pie? Mm-hmm. My words were, yes, it's all baked into the pie because regardless of whatever the Fed says or does, gold's going to go which way? Up. Okay? Well, look at the slide. Fed spoke, gold went up. Okay? And so it was baked into the pie as I described. The pattern's not complete, okay? What we're seeing here is, if you look at those chart patterns, this is what I give to the subscribers. So again, I'm providing a lot of information here that I give my subscribers, but I will not, and I don't provide time points, okay? So the timing points, so this is a cycle, this is my cycle analysis, but it's not my time analysis, okay? And so if we look at the cycles, what you'll see here, this is important to look at. You've got a golden cross formation, okay? So a golden cross is complete. That is when the 50-day moving average takes out the 200-day crosses, okay? Well, that occurred already in March, at the end of February. And so you'll see that the 50-day is already above the 400.
Right.
Okay?
I see that.
So it's already and if you show me, you can go back on these daily counts and these moving averages, and you'll notice that gold has never been above the 600-day moving average for like 4 years. Okay, it's been up there for over a month now, ever since we were in Vancouver, and gold was at $110. Okay, at the end on the 25th of January. I said on the 29th, expect it to break up. And what did it do? It gave us the flagpole formation. It went straight up $153 to $12.63. It topped, and so there is your first leg up, but it broke out exactly where we're expecting it to break out, and it's been going sideways ever since, but it did make a second leg to the upside, and all we're waiting for now is an event, and all the moving averages are now support. So 600-day is complete, support for gold, and it couldn't even touch it before the Fed spoke. It's trading at roughly 40 today. It's still above the 600-day, and we've got a full-on bull market that on the day of our interview, Ken, that we did on December 3rd. You and I talked on that day, and we called the exact bottom, and I know you remember that.
Yeah.
So. Everything is coming along beautifully, and all we do is we count the cycle days that remain in the pattern. And off the Fed, we have an up cycle off the Fed. And so if you go to the next slide, which is silver, because everybody wants to know about silver. Well, why hasn't silver broken out yet? Well, let's look. There's no golden cross yet.
Well,
okay.
You've talked. Sorry, I'm just trying to get my slides together. All right. So you also talked that silver does lag gold. Gold will make bottoms first. Silver will then follow, and then it will catch up to gold when gold makes its move.
That's correct. Okay, so gold bottomed on December 3rd, and then if you look at the silver slide, there's a 5-year bottom on December 15th, right around $13.60. Okay, so that's the final bear market low for silver. It's never going to be there again. And there's a big red arrow pointing there. That was 2 weeks later, so you're correct. Like I said in our last interview, silver lags. And now, silver's about to take over the reins, and it's about to lead gold. Okay, so the pattern's about to finish. And why? If you look at it, gold's already taken out the 600-day moving average. Silver is trading at right around the 400-day right now, but it's gone through it and it's bouncing around the 400-day. Mm-hmm. You'll notice that silver's been holding like a rock. It's like its down days are like, 10 cents, whereas gold might have a $10 down day. Okay, so silver's holding like a rock. Gold has more room to the downside. Why? Because it has a $200 move off the bottom already, and silver's, it's proportionally, silver hasn't moved much off the bottom, so it can't come down. There's no room for it, and it's got support at the 300 and the 400. Specifically, the 300-day got solid support, and at the 400-day where it's trading right now. It is soon going to take out the 5 and the 600-day, and then all hell breaks loose.
So the 500 and 600 day are things to look for. And now you've talked about gold doubling in 2016 and silver tripling. So you are expecting silver to really take over the reins with the anticipations of your price targets.
I believe silver is silver's been held down longer than gold. Silver has been trapped or stuck. It hasn't been at the 400-day moving average in like 4 years, okay? It's now trading at the 400-day moving average. So that's just unusual. It's never been there, okay, for years. And so it's taken out the 300. Now it's just trading at the 400. And I believe what's coming, I don't think the 500 or 600 are barely going to hold the thing. I can't even see it. So what I see happening is basically I see silver being the nuclear bomb for the markets. When silver goes, everything just melts. Everything's going to be massive problems, because once they can't hold back silver, it's just going to be one heck of an explosion and massive problems that are going to hit the world. And I think that's going to be the trigger that's going to ignite the derivative meltdown for our world. And it's just everything is going to trigger and stem from this silver explosion that I see happening. So I see the metals moving first, and then the market's melting down in reaction.
So, Bo, we got a couple more slides here that we haven't gone through yet. I think you wanted to talk about number 7, 8, and 9 now? after we?
We can also let's talk on number 6.
Okay.
We've got the
we missed that one. Okay.
This one I think the world will find, or many people might find intriguing. Jonathan Kahn, and there's been a handful of people that have been out over the past 2 years talking about the blood moons. Everybody, when September ended, it's just like everything went quiet. People forgot to look at what happens in 2016, and lo and behold, there's not 4 blood moons, there's 5. There's actually 3 more eclipses in 2016. We've already had one. There is another blood moon coming this week in 2 days from now, okay? My calculations indicate that, I know this might be hard for some people to believe, but, from maybe the Jewish faith, but Passover calculates for my cycle work to be this week, not in April, okay? And there are references that, basically it relates to Aviv, but basically the barley being ripe. And if that's the case, the cycle or the Passover would move forward 1 month, and that would work out to the 23rd of March. Okay, today is the 21st of March. Intentionally, we're doing this interview today, as you know, Ken. So, with that said, I would suspect that things are going to change very soon here, going forward. So that's I basically see metals making some insane moves. I believe the metal move is going to be biblical, and then following that, you're going to see incredible things happen to the markets to the downside.
Wow. Well, that is incredible. It is a bit out of my scope of how I do my research and the things that I look for, but it's definitely worth taking a look at, and especially with, again, the analysis that you've done and the calls that you made. I mean, you called gold's bottom. You called the stock market high last year, so definitely is piquing my interest, and we'll be sure to have this up before the 23rd, before the blood moon date. So as far as the next slides, Bo, let's do 7, 8, and 9.
Sure. So on 7, so I was in Toronto. I was invited to go speak at PDAC, which I really appreciate that invitation. That was pretty fantastic. But at that presentation, I talked about what's called the Great Wealth Transfer. Okay, the greatest wealth transfer in history. What I see happening here is, looking at my charts, I see an explosion in the price of gold. When the gold and silver explode in price, the move is going to be biblical. It'll be incredible. This move is then going to create the markets to start to crater and fall apart. Once the markets start to fall apart, then you're going to see the markets become, might go 50% down, 70% down. It's supposed to be an incredible crash, but that's basically a transfer. So people who own gold will make incredible wealth and silver, and the people who are in the stock market are going to lose everything. And that's basically a transfer of wealth that I see happening, and I was on stage basically saying that, it's all supposed to start in March, which is here, where we're here right now. So, I'm looking for a world meltdown, and I basically talk about owning insurance.
So a lot of people are looking at precious metals right now and seeing the move higher, and a little bit concerned about them actually being this high. But you're saying, hey, these are epic, significant values that they're trading at, considering what we're going to see going forward. And then that's what you have here on slide number 8.
Right. So if you look at I'm calling gold insurance, you have to go back to my slides on gold and silver. They're extremely important. Go back, do your homework, okay? Don't listen to me. Go do your own homework. If your listeners are listening, go do your homework. Show me when the last time gold traded above the 600-day moving average. Okay? Give me one example. It's 5 years ago. Okay? It's been holding up there for a month. Okay, this is not, you don't look at COT numbers and I've listened to people saying, oh, the COT numbers are bearish and the market's going to go down. No, it's not. Every one of them been wrong since December. Every single person that's made a call on gold going down since December, they've all been wrong, and you know that. Mm-hmm. And right now, it's holding above the 600-day moving average. Silver is like a rock above the 300. It hasn't been up there for ages, and it's about to take that out, take out the 400, and then boom, it's just going to go. And the move's going to be epic. And that basically takes you to my last slide that I sent you, Ken.
Yeah, no, I was just going to say you've pretty much wrapped it up, and you've pretty much said what you're going to say. But again, any closing thoughts regarding gold and silver before we end this interview?
Yeah, I think that just if we look at the last slide, it's dated March 21st, called Gold and Silver. First are expected to explode higher. So I believe the explosion is imminent now. We've got a double pennant formation. The explosion is going to be just biblical. And the timing point, this is the critical thing. If people, if you're just buying physical metal and gold and silver, you don't need the time points. They're not necessary. But if you are trading it, this is going to be volatility like you've never seen before. It's going to explode. They're going to try to take it down. It's going to explode higher. So so the time points, those are what we provided with our gold index or our turn dates. But aside from that, this is going to be an epic move in gold and silver, and I hope people have bought insurance, for themselves and their families, and a lot of changes come into our world this year.
The wealth transfer will happen. Yeah, no, I do agree with you, Bo, and I do hope that people are buying insurance and protecting themselves, because the financialized world is very overvalued, especially with what we're seeing in the real world. And it is amazing how your cycle analysis is confirming, I've said this time and time again, with the fundamentals that do go on within the economy. So we're definitely going to have you on again in the near future to discuss the exact things that were time-stamped on this interview. So we'll have this interview posted on 3/22, March 22, 2016. Bo, thanks so much for taking the time to come on the show with me today.
Ken, thank you, and God bless you and your family. Take care.